Has the recent Bitcoin dump left you scratching your head, wondering what on earth just happened? One moment, the crypto market was humming along. The next, it was like a roller coaster ride with Bitcoin leading the downward spiral. Now, when we say dump in cryptocurrency, we're talking about a significant sell-off of coins, often by large holders, leading to a sharp drop in price. In the case of Bitcoin, it's like a giant tossed a huge rock into a still pond, causing ripples that unsettled the entire market. This recent Bitcoin dump was unexpected, catching many off guard. It wasn't a slow and steady decline, but a sudden plunge that left investors reeling. The market was cruising one moment, and the next it was in free fall. The impact? Well, let's just say it was like a cold shower in the middle of a winter's night. So what could possibly have triggered this abrupt plunge in Bitcoin's value? Diving deep into the factors that contributed to this sudden drop, let's unravel the mystery that is the Bitcoin dump. The plummeting of Bitcoin's value isn't just a random occurrence, it's a complex interplay of various elements, akin to the gears and springs in a watch, all working together to keep time. Firstly, let's talk about market sentiment. Like any traded commodity, Bitcoin is heavily influenced by the collective mood of its investors. Positive news can send prices soaring, while negative news can cause a plummet. This time around, a wave of pessimism seems to have swept over the crypto market. A number of high-profile negative reports, from fears of a global recession to rising inflation, have painted a bleak picture that has undoubtedly influenced Bitcoin's price. Next up is regulatory news. The crypto world is still a bit of a wild west, with regulatory bodies around the globe trying to figure out how to deal with it. News about stricter regulations or crackdowns on cryptocurrency can cause the market to react violently. During this Bitcoin dump, there were several reports of increased regulatory scrutiny from countries like China and India, which likely contributed to the sell-off. Thirdly, we cannot overlook the role of large holders, often referred to as whales. These are individuals or entities that hold a significant amount of Bitcoin. When they decide to sell, it can cause a significant drop in the market. It's suspected that a few whales may have decided to offload some of their holdings, contributing to the downward spiral. Lastly, there's the role of algorithmic trading. Many trading platforms use algorithms to automatically buy or sell based on certain market conditions. In a situation where the market is already falling, these algorithms can amplify the drop by automatically selling, in a bid to limit losses. Clearly, the Bitcoin dump was a result of a perfect storm of several factors coming together. It's a complex dance of market sentiment, regulatory news, large holders selling off, and algorithmic trading all playing their parts in this financial ballet. Now that we understand what caused this Bitcoin dump, what are the key points to remember? Firstly, the volatile nature of cryptocurrencies, including Bitcoin, is something we should never overlook. Their values can skyrocket or plummet in a matter of hours. This recent Bitcoin dump is a stark reminder of that. Secondly, the factors that led to the dump were multifaceted. From market trends and investor sentiment to regulatory changes and global events, all played their part. It's crucial to remember that market dynamics are not isolated. They're interconnected in a global financial ecosystem. Thirdly, staying informed is your best defense against such unexpected market shifts. Keep an eye on market trends, regulatory updates, and major global events. In the digital age, information is readily available, and staying updated can make all the difference. Remember, in the world of cryptocurrencies, knowledge truly is power. With the dust from the Bitcoin dump beginning to settle, what's next on the horizon? If history is any indicator, we know the crypto market is a roller coaster of highs and lows. So could we be gearing up for a new rise? Possibly, but remember the key word here is could. The future of Bitcoin, like any other investment, is not set in stone. What we can do is speculate, observe, and most importantly, manage our risks. Don't put all your eggs in one basket. Diversify your investments. And while we're at it, let's not forget the importance of being informed. The Bitcoin dump stirred up a lot of emotions, but in the world of crypto, volatility is the name of the game. The Bitcoin dump may have shaken the market, but remember, every downturn presents new opportunities. Stay savvy, stay informed, and keep an eye on the horizon.